Good morning and welcome to today's pre-market video. Now in today's pre-market video we'll take a look at the Nifty Index and what option buyers and option sellers can do. Before that, let's take a quick look at the news front. Now on the news front, basically what affected the market yesterday is largely going to affect it today. Yesterday the whole thing was based around Trump because he was basically considering an emergency declaration of tariffs, and that ended up affecting our markets today, plus the very bad GDP numbers, basically not GDP numbers, the bad GDP estimates that were released by the government, which showed that it's going to be the lowest in 4 years. Now, according to me, it was expected, because even when those watching my videos know that when the last rate cut decision was done, I had said that the RBI governor, the former one, Shaktikant Das, had missed the bus, and now this time he basically just drove the bus down a valley. He pushed it down the valley. This is the economy was slowing down, and the slowdown was no longer a one-quarter phenomenon. Then, apart from this, the RBI was staying tight for too long. Rupee was depreciating. US yields were high. So why will somebody hold FII bother with Indian markets when all that is going against the Indian markets? Then also another factor, the government spending the last fiscal has not been as strong as budgeted, and that also affected the whole thing. So it was a plethora of problems, and him not doing the rate cut is what I believe has brought the economic numbers to what they are right now. And hopefully they do wake up now, and before even the next Monetary Policy Committee, they can just announce a rate cut, as it will cause a big stir up to happen, which will be beneficial to no one else but the Indian economy and the Indian government. But now it's their decision whether they want to wake up or not. So that, I believe, is going to continue affecting our markets for quite some time. The pressure is going to stay on naturally. There will be a bit of relief. Let's say like yesterday, if you look at the trading session, I had even shared it post-market that I caught the full bounce. Now, why did that bounce happen? We fell due to the GDP numbers being garbage. Then we bounced as we simply got oversold, and it was a technical bounce, and that is why my indicators were able to catch it, as I showed in the pictures attached after the market yesterday. So now what will happen in today's expiry? Now, I believe today's expiry is a bit dicey. Why I say that? As we had a very good move yesterday, and that move has made things a bit interesting and dangerous at the same time. This is as if we take a look, we in fact remove the levels and we just take a look at the Nifty on the daily chart, for example. The Nifty on the daily chart has managed to come and reach a support level and formed basically a small price rejection here. However, the issue with this price rejection is it's got a lot of resistance above, so its scope of rising is limited as of now. The volume buildup is not in favor of it. The black trend catcher line is still below the red trend catcher line, in fact going the opposite direction of where it should. So now the big question will be is how the market opens and how it is able to fight, according to me in the hourly chart, this price candle. And this is really going to decide how the market performs in the coming session. And if it is able to take out this price candle, then there's going to be an improvement. If it's not, then things are going to stay as hairy as they have been. Now, what's my trading plan? We are looking at this expiry, we're not looking at a bigger picture. The bigger picture is positional trading, and this is just for intraday. Now, according to me, as long as the Nifty stays between 23,620 and 23,900, it is going nowhere. This is as within this range, it's just going to end up being a yo-yo and bouncing around and not giving any side clean moves. What I am hoping for as an intraday trader who does option buying plus option selling is that we get the speedy moves in this range. Because if it goes slow like it did, let's say the day before yesterday, on Tuesday's trading session, the indexes went completely dead slow. It will be very good for option sellers, but a nightmare for option buying. So I am hoping within this range, we get a good intraday movement. But as long as you're within this range, You're not going to get a clean long, you're not going to get a clean short. You're going to have to, let's say, trade as per the signal. And I technically in this range have been using, and even what I used to catch the full up move yesterday, as I showed, I used basically the shorter time frames, like the 3 minute and the 5 minute chart, for example. People have to go to those time frames if they want to get a decent thing. Now, if we break 23,900, then we will have a sprint up to 23,960. If that breaks, then a sprint up go to 24,100, 24,180 and 24,250. Now, why these resistances are close to each other and here there's a good gap, is simply that once we enter this point, this price bar again comes into action, and the simple moving average is also a resistance, and even here there is a resistance of price action, and so there is too much going on at that point. So according to me, any up move above 2300 will maximum go until here, and then it is again an X, dead. On the other hand, if we break 23,620, then we are having a fall to 23,480, and if we break that, then 23,400. If we break 23,400, that's when we will open up sort of in the weekly chart arena, and as intraday we might go to 23,250 and have a bounce, but it will open up a weekly scenario that will not be favorable for the Nifty. So according to me, right now, if I look at it in a bigger picture, this zone which we are in of 24,250 to, I would say, 23,400 is a zone that's going to decide how the Nifty performs for many weeks ahead. And the longer we stay in this zone, the more adverse the reaction is going to be, the bigger picture. But for intraday, as I said, if you break 23,620, that's when you're going to get a big down move. You break 23,900, that's when you're going to get a big up move. Now, what's my option selling trading plan? Now, option selling, it's a bit tricky for this expiry, and I want to play a bit cautious. I've had a very good trading week, and I do not want to bet it. As I said, that today I expect it to be a bit dicey. So now I will not choose to sell one side, as basically I will sell call sells and put sells at the same time. Now, if you're an aggressive option trader, I think you can enter put sells below 23,620, so 23,600 and below, and call sells above 23,900. That's aggressive. Why I'm saying aggressive for this type of a trade is simply because if we pop out of this range at any point, then we're going to have a one direction move either up or one direction move down. So this expiry, I most likely naturally will play aggressive, and I will do the usual enter gradually, keep tight profit stops, as if one side gets hit, then the other side will go to zero, and I'm out of one leg with some small profit, and the other leg goes to max profit. So that's how I'm looking at it for this expiry. If you're cautious, then sell calls above 24,100 and P is below 23,480. So that takes a wider view. Naturally, the premiums you're going to collect are going to be less, but it is what it is. The more risk you take, the more profit you're going to make. Simple market dynamics. So that's it for today's video on the Nifty. If you liked it, then hit that like button and subscribe to the channel. And any suggestions or any stocks you want analyzed, drop them in the comment section below, and I'll take a gander at them. Thank you.